Hello students, welcome back. This is Mrs. Mercado speaking. During this short lecture, I am going to be going over some problems that you're going to be seeing in your homework over chapter 25 that deals with differential analysis and product pricing. Now, before you attempt any of your assignments, please make sure that you review the information provided on your textbook. Okay? Do not attempt the problems until after you've read the chapter. PowerPoints are included. That way you can take notes as you're reading. That way you're reviewing the information on the ebook and then you're comparing it to the PowerPoints and you're taking notes. That way when you're solving the problems, you've already have all of those notes written down. Okay, reading is very important. Now I'm not going to go over the content of the actual chapter. I'm going to let you read that information. I'm going to go to the application of what was being covered in the chapter. So I'm just going to dive into the problem solving. That way my lectures are not that long and I don't bore you, okay? Because I know that listening to an hour or 2-hour lectures can be tiring, okay? So the first problem that I'm going to be going over today deals with differential analysis for a lease or sell decision, okay? So in this particular example, this is wonderful in case you have a business or you plan on opening up your business and maybe you have some equipment that you have, some machinery that you have on your warehouse that you're not using. It's just accumulating dust. You have to make a decision. You know what? Well, I don't need that equipment. Should I, sell it? Maybe I should lease it out. What should I do with it? That's the scenario we're being presented with today. Okay, so here we have Burlington Construction Company is considering selling excess machinery with a book value of $115,000. So what does that mean? That means that we have this piece of machinery valued in our books for $115,000. That piece of machinery cost me $275,000, but we've already depreciated it $160,000. Okay, so we have this piece of machinery we're considering selling, and it's in our books for $115,000, and we are planning on selling it for about $90,000. Okay, less a 6% brokerage commission. Alternatively, the machinery can be leased for a total of $100,000 for 4 years, after which it is expected to have no residual value. During the period of the lease, Burlington Construction Company cost of repairs, insurance, and property tax expense are expected to be around $9,000. So, requirement A. They're asking us to prepare a differential analysis dated January the 15th to determine whether Burlington Construction should either lease or sell the machinery. So leasing the machinery is alternative 1. Selling the machinery is alternative 2. So we have to figure out what is the best option for Burlington Construction. Okay, so I've already set up the differential analysis here. I've got lease, which is alternative 1, versus sell, which is alternative 2. So we have to make a decision. What are we going to do with this piece of machinery? Okay, so I've got my revenues. We need to calculate, okay, what is the best option for us? And of course, as a business, we're going to go with the option that gives us the highest profit. Okay, we're in the business of making money. Okay, so because of that, we have to compare our revenues and our expenses and determine our profit or our loss to figure out what option best, fits our decision model here, which is to make money. Okay, so the first one we have is the lease option. Okay, according to the problem, if you lease the piece of machinery, okay, if you lease it, let me see, where does it say? Right here. If you lease it, you're going to lease it for $100,000. Okay, so that's what the problem says. If you decide with the option of leasing, you're going to generate $100,000 in revenues. Okay, if you sell the machinery, you're going to sell it for $90,000. So right off the bat, the leasing option gives you a higher revenue, okay, $90,000. Okay, so if we compare selling the machinery to leasing the machinery, I'm losing out $10,000 if I sell it. So right now, just looking at the revenue component, leasing the machinery is the best option. But we don't only take into account the revenues, we also have to take into account the associated cost or expenses, okay? So if I lease the machinery, what cost am I going to incur? Well, the problem says that if you lease the machinery, you're going to have to pay cost of repairs, insurance, and property tax expected to be $9,000. So if you decide to lease it, you're anticipating paying $9,000 over the next 4 years, okay? So because this is a cost, it's going to be in parentheses, okay? Because I'm spending this money, okay? How about if you sell the machinery? Well, are there any costs associated with selling the machinery? Well, it says here that we have to pay a brokerage commission of 6%, okay? So let's calculate that brokerage commission, okay? So I am selling the machinery for $90,000, and I have to pay a 6% commission on the sale. So let's see how much that gives us, okay? 9123 times 6%. That gives me $5,400. So that is how much I'm going to have to pay in commission to sell the piece of machinery. Okay, so that's a cost. So I'm going to put that in parentheses. Okay, so I'm going to compare my alternative 2 to my alternative 1. Okay, so if I compare selling versus leasing, it's cheaper for me. I'm going to have less costs associated with selling the machinery. Okay, I'm going to save $3,600 in cost if I sell. Okay, well, now the fun part is here. We need to figure out my profit or my loss, okay? How do we calculate the profit or the loss? Well, we're going to get our revenue, okay, minus our cost, okay? So 100,000 minus 9,000, that's going to give me 91,000, okay? We run the calculation for each of the categories. So for leasing, 100 minus 9,000 gives me 91,000. For selling, 90,000 minus 5,400 gives me 84,600. And the difference between selling and leasing is $6,400. Okay, so which one gives me a higher profit? A higher profit is given by leasing the machinery. Okay, yes, my costs are a little bit higher, but hey, my revenues are also higher. So if I had to choose an option, I would choose the lease option because that gives me the highest profit. Okay, so they're asking us to prepare a differential analysis, which we've done. Okay, now letter B. This is letter A. Oh, let me see right there. And then this is letter B. Okay, letter B says, on the basis of the data presented, would it be advisable to lease or sell the machinery? Explain. Okay, well, just by looking at the numbers, the one that's going to give us the highest profit is the lease of the machinery. Okay, so we are going to choose to lease the machinery because it generates a higher profit. Okay, the net gain from leasing will be $6,400. So if we go with leasing, I'm going to get $6,400 more than if I were to sell it. And we are in the business of making money, so we're going to go with the option that gives us the highest gross profit, okay, which would be leasing the machinery alternative. So that is what we're going to choose to do. We're going to choose to lease the machinery because it gives me the higher profit, okay? So all we did here was compare the two options and then go with the option that yielded the highest profit, okay? So pretty straightforward problem. Follow the calculations, and if you have any questions, please reach out to me. Thank you.